All right. Okay. So I think that we are in. Let's just do a checkup. Yeah, I'm going to start recording. Okay, hello everybody. My name is Kiana Danial. Let's do a quick check as to see who we have here and who can hear me. If you could please type a Y for yes if you can hear me. All right, we're waiting for responses to see. All right, we have Naomi, Maria, Santosa, Victor, Yasir. Forgive me if I'm not mentioning your name. All right, so this is going to be a great webinar because we are going to talk about a very special indicator in the Forex market. Before we get started, because I can see that we are getting more attendees. So let's talk a little bit about the fundamentals today. Well, oil is a big issue and a big topic today, and well, it has been for the past, going down low for a while, and it doesn't seem to be stopping anytime soon. Some analysts are actually predicting, well, right now it's around the 60 level, but some analysts are predicting that it is going to go down lower, even into the 40s areas. And I was hearing some people think that 60 actually is going to be a new high, which is going to be crazy. Well, there are a bunch of reasons as to why we could see oil prices to go lower. Politically, as you know, well, the U.S. is basically kind of on a Cold War with Russia, and these cheap oil prices is really hurting Russia. And so for that reason, until Mr. Putin starts to change his policies, there is a good chance that we can see the oil prices to remain low. Also, because of low prices in oil, now gas prices are obviously very cheap in the U.S. And as you know, the oil prices and the U.S. dollar are reversely correlated, and therefore the U.S. dollar is getting stronger. And the whole thing is pretty good for the U.S. consumers. And in the past few days, actually, like during the holidays season, a lot of people have been very confident that the oil prices are going to remain the same and in the low levels, that they are investing in trucks and SUVs and big cars that eat a lot of oil, and they think basically to remain the same. That I don't think is going to happen, because the markets, they're always going to go down and going to go back up. People just assume that when something arrives, it's going to stay there forever. It never is the case. So if you are buying a truck only because of the low oil prices, I don't think that that's a good idea, because, you know, you're investing in a truck and probably are going to use it for a good, at least 5 to 10 years, right? So assuming the oil prices are going to remain the same in the next 10 to 15 years is not very wise, let's put it that way. But again, there are, for getting into 2015, reasons why we could expect the oil prices to remain low or even go lower are not only the U.S. and Russia, but also in Saudi Arabia. They are lowering their prices because in the U.S. there have been some oil inventories that are competing with Saudi Arabia. So Saudis are continuously lowering their prices in the competition. So if you've been enjoying the low oil prices, that's good for you. If you're not, you can wait a little bit and wait for it to go back up. All right, so I think we have enough people here today. It's great. I'm going to jump into the webinar. Let's see if we have the right screen on. Okay, so let's do today's agenda. For those of you who have never been to a webinar, to our webinars, I am going to introduce myself as well as our relationship with Orbex and Orbex products. For the beginners joining us today, I am going to have a very brief walk through the markets, the Forex market, what it is in the common terms, and then we are going to jump right in to Ichimoku Kinko Hyo. It is not a magic wizard word. It is actually a Japanese word that we are going to get right at it. And after we define all the indications, we're going to go, if we have time, we're going to do a live market walkthrough and show you live how to use Ichimoku as an indicator in your trading analysis. So please get prepared as always. Grab a pen and a note so that you can take notes during the webinar. Otherwise, you're either going to lose your attention. If you have your Facebook open and want to write the notes on your Facebook status, that's fine as well. But depending on the person, I'm more comfortable with having a pen handy, and so if you're that type of person as well, that is going to be a great idea to have a pen and a paper. A little bit about Orbex's trading library. They have prepared for everybody, for all of you guys, videos, ebooks, infographics, trading tips, analysis. The videos are prepared by myself, education as well. So if you have actually watched our education videos and do have a question, please don't hesitate to just shoot us an email and ask us for more explanation. We could actually make a good webinar out of it. So definitely check out the Orbex Traders Library. A little bit about myself so that you know why I'm here today. My name is Kiana Danial. I am the founder of InvestDiva.com. We are solely an education platform, and we're not a broker basically, so we teach people how to trade, and we really hope for people to trade responsibly and make money in this market, because we believe that a positive energy of people really making money in the market is going to be good for the Forex industry as a whole. So definitely come visit us, get yourself educated, and trade responsibly. So a little bit about my background. Actually, I was not born a Forex wizard. I was born and raised in Iran. Then I went to Japan to study electrical engineering, so I had nothing to do with Forex. And over there, in my 6th year of studying, I have 2 degrees in electrical engineering. I was kind of bored in 2008, and I noticed the dollar was going down. It was the opposite of what is happening right now. And I just figured maybe I should exchange my Japanese yen into dollar, since the dollar is getting very cheap. And one of my Japanese friends, well, she was my host family's mother. She taught me about Forex and told me how I can actually use the leverage and trade actively, not only once, but trade actively and make even more money during the volatility. And that's what I did. I made money, and I got excited, and I decided that I do not want to be an electrical engineer anymore, and I want to become a Forex trader. I came to the U.S., to New York, which is the heart of finance and trading of the world, and I started working as an analyst. I noticed how much education is lacking and how important it is for all traders to make money, and that is how I founded InvestDiva.com, and I dedicated my career into educating people as well as trading myself, because opportunities are endless in this market, and every morning you can find a new opportunity. So even today, you see, even right now there's a year end and stock markets are kind of going crazy, but you can still find opportunities in the Forex market. So what is Forex? For those of you who are completely new and thought it will be a great start for you, Forex is basically the concept of trading one currency against another currency. There are 200 or so currencies in the world. On the active trading platform, we don't trade all 200 of them normally for various reasons. The most mainly traded currencies are what are called major currencies that contain the US dollar, the euro, the Japanese yen, the New Zealand dollar, British pound, Canadian dollar, Australian dollar, and Swiss franc. And you can either trade them versus the US dollar, or you can trade them versus one another. For example, you can trade the euro versus Swiss franc and vice versa, right? And the good things about the Forex market, and I'm hoping you already know about it, and that's why you're here, but in case you don't know, is that the Forex market is the largest market in the world. It's around $4 trillion worth of transaction every day. That is 53 times larger than New York Stock Exchange alone. Other good things about Forex is that it never stops during the week. There is no closing bell. So you can trade wherever you are, whenever you are, using any kind of gadget that you have, your phone, your iPhone, your computer or iPad or what have you. And you generally won't expect a massive total crash in the Forex market because it's just way too large. So generally and typically in a longer term point of view, the Forex market moves in cycles. It goes up, it goes down, it goes up, it goes down. In a micro level, stock market behave the same, but for example, just think about Google or Apple. They have generally just been going up over the years. The Forex market is not like that. If you look at the Euro's chart versus the dollar, for example, it was down back in 2010. It went back up in the past year, like in 2013 and beginning of 2014, and now it's going back down to the levels of 2010. So this cycle really basically just goes back and forth, and that's why for a longer term trader it is a very predictable market to trade. And last but not least is the high leverage that is provided in the Forex market. It is a good and a bad thing. The high leverage enables you to multiply your profit if you're in a winning trade by, well, I believe the Orbex actually does provide with 500 times leverage in some countries, but a lot of countries, including the U.S. and Japan, have had massive regulations, and in the U.S. the maximum leverage you can have is 50, which is still pretty high in my opinion. In Japan is 20. So if you are in fact trading on leverage, my recommendation to you is to definitely be careful, get yourself educated. Don't just jump into the trade just because you feel like it's going to be a winning trade. You should definitely analyze the markets from different point of view, what is happening around the world geopolitically, what is going on in the technical point of view, what is the market sentiment, and also what is your own risk tolerance. So these are what we call in the Investiva education course the 5 points of the Investiva diamond analysis, and you should definitely check with all that before you enter a Forex trade. So as we said, the markets go up and down, and this is how you make money in Forex. That is the main reason why we are here. How to make money in the Forex market. When the markets go up, it's the same as in the stock market. You try to buy low and you try to sell high, and that's what it is. It's the same in the Forex market. The only difference is that when you're trading Forex, you're paying one currency and you're buying another currency. When you're trading stocks, you're paying one currency, for example, a US dollar, and you're buying a stock of a company. So it's a little bit confusing for some people. The concept is basically the same. You look at the chart. When the market seems to hit the low, buy, then wait and be happy. That's it. Very easy. And we generally try to trade based on a trading chart. I know that there are like some spot trading gadgets available. I definitely highly recommend not to use them, and definitely trade on a chart, because you can see the market sentiment, you can see the indicators. We have been covering reversal patterns and candlesticks and all that in our previous webinars, and today we're at one of my favorite indicators. So a chart, a technical analysis, means taking a look at the price action, the previous price action on the chart. So what you can see, for example, in this euro-dollar chart is the past price coming up to the current price. Well, this is a little bit of an old chart. This is from March. But as you can see, the prices have been going up and down and up and down and up and down. And as a technical analyst, we try to find patterns. We use indicators. And all we're trying to do is to find that low and that high and get into the market. Okay? There are different types of charts. We've talked about this before. The most recent and most popular ones are the candlestick charts, but previously a lot of traders did use the line charts, which only shows the closing price of the market, and they plot them together and becomes a line. Then there are bar charts, and right now what we're going to use are the candle charts, which are a lot more comprehensive than any other kind of chart. A candle, there are two types of candle. A bullish candle, which its color basically shows the direction, the general direction of the market during the time frame the candle was built. Normally it is shown in white or blue or green, and you can see the opening price of the market, the closing price of the market, and the range in which the prices traded during that time frame. Right? So for example, this is a 4-hour chart. Each of these candles shows you a history, a story of the price movement during the 4 hours that took for this candle to be made. All right? And another one is the bearish candle, where the open price is generally is higher than the close price. It opened higher and it went down. It did go probably different price for hours, but then it ultimately closed in a lower price, and therefore it was a bearish candle. For example, here you see a very huge drop in this black candlestick, which shows the market sentiment was generally bearish at that time. And you can use the candlesticks for indicators as well. But today we are going to talk about technical tools. We're not going to focus that much on the candlesticks themselves, but we're going to talk about technical indicators that are used by many analysts to trade. Before we get into this, if you have any questions, please write it right now. Do you have any questions about technical analysis? Candlesticks? Are we good? Adrian? Ashley? Everything is okay? Alessandra? I'm just calling names. I do want to have a interactive webinar over here, so if you do have a question, definitely ask it in the chat box. Michael, everything okay? All right, Richard, Shoaib, we have a lot of attendance today, so that's a good thing. So I don't see any questions, so we're going to start with the definition of a technical indicator. Generally, for those of you who have traded stocks before or any other kind of basically technically charted market, you have found a tool that adds a kind of line above or below or on top of the price action, right? These are called the indicators. The indicators are generally an average of the previous price action, and you can use them as a signal as to where the prices are going later on. Let me explain. There are different technical tools. You've probably heard of them before. Bollinger Bands, moving averages are the kings of the technical indicators. Ichimoku Cloud is actually kind of a moving average. We're going to get into it later. Channels, pivot points, and so on. There are so many different technical indicators that you can add on as six. The recommendation is not to add on too many indicators because that is only going to get you confused. So using at maximum 3 indicators on a chart is recommended. So Ichimoku, I call him Mr. Ichimoku. Its full name is Ichimoku Kinko Hyo. It's in the Japanese name, and if you are Japanese, you probably can understand what it's written over here. Ichimoku means a glance, and Kinko Hyo is a chart, and Kinko is like imbalance. So basically what it means is that the Ichimoku Kinko Hyo enables you to take a look at the chart in balance, and it reveals a lot of secrets. That's what I like to think about. And it was in fact invented by a Japanese journalist in 1936, and it is mostly used for the dollar-yen pair, therefore, but I definitely do use it for other pairs as well. It is mostly well known in the among the Japanese traders, but I definitely think it is a useful indicator for every pair and everyone. There are 5 elements in an Ichimoku chart. There are 5 different moving averages. Let's just start with the names of them. We have the Kumo, which means the cloud, and if I show it to you on the chart, you'll see that it actually does look like a cloud. We have the Kijun Line, which means in the chart that I'm going to show you in a minute, I've colored the Kijun Line in the thick pink line just to make it easier for you to identify. Then we have the Tenkan Line, which means the turn line, or also conversion line in English. And then we have the Chiko Span. Chiko means delayed, and I'm going to show it in dashed blue lines in the chart later on. So these are the names. I want you to get familiarized with the colors at least before I go ahead and throw an Ichimoku on a chart, because some people get panicked when they see an Ichimoku indicator on the chart. They think it's too crowded, but if you're familiarized with it, basically, for me actually, a chart without an Ichimoku indicator looks completely naked. So get yourself familiarized. We're going to have the dashed blue line. You're going to have the thin black line. We're going to have the pink line, and we're going to have the cloud. All right? Okay, are you ready? Okay, here he goes. This is a chart adding an Ichimoku indicator to it. So don't get panicked. As you can see, we have the pink line, which was called the Kijun Line, right? It's the base line. We're going to get into the meaning of them in a second. I just want you to get familiarized with the elements on the chart. Then we have the Tenkan Line, is the black thin line over here. You can see that it is moving closer to the actual price, right? So if you think about it, and I've already told you that this is a moving average. So the Tenkan Line generally moves closer to the price action, and in a minute I'm going to tell you why. Then we have the Chiko Line, or the delayed line. Who can tell me what you see in common with the Chiko Line and the actual price action. You see, this is the Chiko line, the blue line, and the green and purple candles are the actual price action. What do they have in common? They're exactly the same. They're exactly the same, but the Chiko line or the delayed line is basically just delayed for a number of periods. So it's plotting the actual price action with a delay. And based on its interaction with the other lines, we can use it as a signal. We got to get into that in a minute. But now the most important element of the Ichimoku Kinko Hyo is the cloud. Did you identify the cloud? It's right over here. You see, it does look like a cloud. It goes through and above and below the price action, and it actually is the area below, between two lines that are called the Tenkan lines. We're going to get into the calculation of them in a minute, but that is basically what the cloud is. All right, okay? So this is what the Ichimoku Kinko Hyo looks like a chart. Don't get panicked. We are going to go one by one and tell you what do all these moving averages mean and how you can use them in your trading. First, let's start with the Kijun line. It is shown in this with a pink thick line, right? So the Kijun line basically is the average of the highest high and the lowest low within the past 26 candles. So if you count, I'm not going to count, but if you count 26 candles, it's probably like this much, right? And average them, divide them by 2. This price, the highest high, and the lowest low within this 26 candles, and divide them by 2, that is going to give you the number for the Kijun line. So 26 is a big number, right? So that's why the Kijun line is actually a little bit further away from the actual price action. This is a slower moving average, okay, because it reflects the whole 26 periods. So that's that for the Kijun line. Good? Everything okay with the Kijun line? Did you get yourself familiarized with the pink color? Mind you that you can use, obviously, different colors. If you go onto your trading platform and click on the Ichimoku indicators, there is a good chance you're going to get different colors for it. So don't rely on the colors that I'm talking about. But the good thing is that your platform is definitely going to tell you which one is which one is Kijun line, which one is Tenkan or the other lines. So you can go ahead and set different colors for yourself so that to make it more visible and visually pretty for you to look at, but these are the ones that I felt comfortable with. Don't expect the same exact colors on your platform. All right, so that was for the Kijun line. Next, we have the Tenkan line. We talked about it before. Tenkan line on this chart is this solid thin black line that is moving very closely to the price action. The reason why it's moving closer is because this is again an average of the highest high and the lowest low, but only within the past 9 candlesticks. You see, so the average is much closer. The average is much faster. That is why we also can call it the fast line. So the Kijun line is the slow line, is the average within in the past 26 candles, but the Tenkan line or the turn line, or in other English words for it can be the conversion line, is the fast line, is the average for the past 9 candlesticks. So the highest high in the past 9 candlesticks in this chart is here, and the lowest low is here, divided by 2 gives us the plots, and then you basically draw a line between each of the dots and connect them together, and that gives you the whole line, the whole Tenkan line on your chart. The next important line is the Chiko line. As I told you, is the exact same as the price action, but it is plotted 26 candle or 26 periods behind. Okay, so this is in fact the closing price of the prices. There is no average for the Chiko line, but it is plotted 26 periods behind. Okay. The next and most important element of Ichimoku is the cloud, or if you want to add it to your Japanese dictionary, it's called a Kumo. Kumo means cloud, like the real cloud in the sky cloud. So what this is the area between the two lines that can predict the future, right? So as you can see, the Kumo is actually going and continuing even beyond the current price action, right? And so the reason for it is because it's actually showing us where the markets can go in the future, and that is why it can be a very useful indicator. So what are these two lines that the Kumo is basically created in between? They are called Senko lines or Senko span, and Senko basically means future. Okay, and the Senko line, there are two Senko lines. There is the leading Senko line, or you can call it the Senko span A, and then there is a Senko span B. Okay, and the way they are calculated is basically the first one is averaging the Tenkan line and the Kijun line plotted 26 periods ahead. You see, so up until now, all the other ones were behind, but the Senko lines are plotted ahead. So the first Senko line is the average between the Kijun and the Tenkan, plotted 26 periods ahead. The second one is determined by averaging the highest high and the lowest low for the past 52 periods, plotted 26 periods ahead. Okay, you do not have to worry about the calculations. I just wanted to showcase them to you just to have a general idea that these are not just a bunch of stupid lines on the chart, and they actually have meaning, mathematical meaning to them, and that is why we like using them. Okay, so that's it. So I think we covered the whole 5 lines separately. Now let's go and see what do these 5 lines actually mean. Okay. All right. So I'm actually going to go back and forth between the chart and the buy signal because I don't want you to just memorize it. But this is a good chance for you to take some notes for the signals that the Ichimoku can actually give out to you. We do have the Ichimoku Kinko Hyo fully described in our Investiva education course. So you can actually find this one for free. You don't have to enroll in our education course for this one. So definitely look out for Ichimoku Kinko Hyo under investiva.com, and you can get all these notes over there. But for now, definitely do take the notes. So as I said before, we are using the indicators. Why? Because we want to make money, because we want to know when to buy and when to sell. Right? So what are the Ichimoku's buy signals? The first one is when the candles are above the cloud, or when they just break above the cloud. That can be generally a good buy signal. Another signal for Ichimoku cloud, let me just bring this for a second over here so that you're not just looking at it blindly. Hold on one second. All right. So for example, in this chart over here, right, when the prices just broke above the cloud, you see, you saw the market went up. When the prices just broke below the cloud, the market went down. So that is how you can generally get a signal out of Ichimoku. The next buy signal for the Ichimoku cloud is when the Chiko Span crosses above the cloud. The Chiko Span was the delayed line, the one that was plotted in blue, right? And let me just bring it over here. This is the Chiko Span, right? So when the Chiko Span is crossing above the line, that can be an indication that the market is going to go up. Another buy signal is when the Tenkan Line crosses above the Kijun Line. The Tenkan Line here was the fast line, right? And the Kijun Line is a slower moving average. And when the Tenkan Line crosses above the Kijun Line, as you can see over here, the markets actually did go back up. So actually they happened at the same time. The markets, the prices broke both above the Ichimoku cloud and the Tenkan Line crossed above the Kijun Line. So that was a certain buy signal. All right. Now the sell signals. Let me see if we have any questions over here. Okay, Sarah is asking what is the best time frame to trade the Ichimoku. That is a great question. I'm actually going to cover that in a little bit, so just bear with me while we cover the signals first. So the sell signals are basically the opposite of the buy signals. When the candles are below the Ichimoku cloud, that is a sell signal. When the Chiko Span or the delayed line crosses below the cloud, that is a sell signal. When the Tenkan Line crosses below the Kijun Line, that is a sell signal, right? Let me just bring it up here one more time. So, as I said, hold on a minute. So, when the, let's get this mouse over here. So, again, for the sell signals, when the prices break below the Ichimoku cloud, that is a sell signal. When the Chiko Span, which is the delayed line, crosses below the cloud again, you see, so over here it crossed below, but you have to remember that the Chiko Span is delayed. So when you're trying to, when you're at this time frame and you're trading at, for example, the current time, you are always trading the current time. So that what happens with Chiko Span is like you're looking at the Chiko Span at your current time. So for example, right now if I'm trading, I don't have an indication from the Chiko Span. But over here, this is probably where the Chiko, this is exactly where what I would have seen when the markets were over here. And as you can see, the market move down. Are you with me? Any questions? Okay. So let's go back to the normal mouse over here. So these are the signals, the general observations that you can get from the Ichimoku cloud. But there are more secrets as well. One of them, which is, these are a little bit less likely to happen, but when all 5 lines are parallel, you can expect the market to continue in that direction. The trend is going to remain your friend, right? So if all 5 lines, the Tenkan, the Kijun, the Senko Span, and the cloud, all of them are going up, you can expect the market to continue further up until you get a indication otherwise. And vice versa, if all 5 lines are going down, you can expect the market to continue down for a while until you get a reversal signal. And another very important secret is that when the candles are inside the Ichimoku cloud, that means that the market is consolidating, is moving sideways, and it's probably not a very good time to enter a position, because you want to enter a position based on volatility, and when the market is consolidating, it's very, very hard to say or to tell which direction the market is going to continue. We have covered this in our continuation patterns and reversal patterns before. Generally, when the markets are inside the Ichimoku cloud, they are moving within a rectangle pattern or, for example, a triangle pattern, which are also consolidation indications. So you can back up your consolidation analysis or basically identification if you add the Ichimoku indicator to your chart and see that the markets are in fact moving inside the Ichimoku cloud. Okay, and so we have spoken about support and resistance levels and how to identify them on the chart. Ichimoku cloud also gives you another means of identifying support and resistances based on the bottoms of the cloud. So the lower band, as you can see in this picture, the lower band of the prevailing cloud can be used as a level of support. So if you're thinking that this market is a bull market over here, and it is a bull market, and you don't know where to set your stop in case the market changes direction, you always have to obviously set your stops and limits, right? So you can use the Ichimoku's bottom, the lower band of the cloud, as a support level to use for your stop and limit. And conversely, the upper band of the prevailing cloud can be used as a layer of resistance. So this is a bear market. You probably are in a bearish position and you want to set a stop again for your bearish trade. So you can use, not only you can use other kinds of resistance levels, but also you can match them up with the upper band of the Ichimoku cloud on a downtrend. All right, any questions up until now? We are doing very well with time, so I guess we can actually go ahead and have a market walkthrough. Just let me know if you have any questions. I am going to get back to your question in a minute, Sarah. Don't worry about it. Okay, so these are actually the frequently asked questions that I get in my webinars. So the first question is that, is Ichimoku indicator right for me? Well, it really depends. An Ichimoku indicator is great for visual people. If a trader really wants to see everything in a glance, that is what Ichimoku Kinko Hyo means, right? It means the market in a glance. It's great for you to add Ichimoku to your day-to-day trading analysis. And so if you can see yourself getting used to the Ichimoku indicator, definitely go ahead and use it. Otherwise, if you are more of a numbers person and you're more of a, I don't know, patterns person, then probably Ichimoku is going to make your chart a little bit too crowded. But for visual people, Ichimoku is a great indicator. And then the next question that Sarah also asked was that, what are the best time frames to use Ichimoku? We have covered this before, that obviously you can have different time frames for your trading, and that the time frames that you're using, they basically show what kind of a trader you are, right? So if you're a scalper, if you're a short-term trader, you are obviously using a shorter-term chart. You're using the 30-minute chart, you're using the hourly chart, you're using the 4-hour chart. And if you're a longer-term trader, you're using a longer-term frame. You're using the daily chart, you're using the weekly chart, right? And as for what are the best time frames to use Ichimoku, you can use Ichimoku for that time frame as well. It doesn't mean Ichimoku is not set for a certain time frame. It really depends on what kind of a trader you are, and you can definitely use it on all different time frames. But a good thing to do, because these are just mere indicators, they're not always 100% accurate, right? Never you should assume that okay, because the prices are above the Ichimoku cloud, I am going to be bullish. No, you should never do that. So one thing you can do, if you're not sure about the indications you're getting, is to zoom in and out from different time frames. If you are even like you trading on the 30-minute chart, I would definitely welcome you to zoom out and go to the daily chart and see how the Ichimoku is basically plotting in the longer term time frame and get a better general big picture of the markets in general, and vice versa. If you're a day trader and you're not sure what is going on, for example, if the market is consolidating on the daily chart but you're not sure, you kind of think that the market sentiment is going to change, then you can zoom back down and go to the hourly chart and see where the Ichimoku stands over there, and then come up with a longer term trading scenario and strategy, right? And the last question I've gotten before is that can I set profit target using Ichimoku? Well, as I said, you can use the Ichimoku's lower band and the higher band as support and resistance levels, but because the cloud is generally not a line, is not a certain level, the best thing to do is to basically match it with other supports and resistance and profit targets that we have covered previously based on the patterns and historical resistance identification. And then, yes, you can do it. But by itself, it's a little bit hard generally to use only Ichimoku to set a profit target. So we usually use the Ichimoku Kinko Hyo as an indication of the market trend and not for profit target settings. All right? Okay, any questions up to here? We have 10 minutes. And if you don't have a question, I want to go ahead and have a live market walkthrough based on the Ichimoku Kinko Hyo. So here we have the euro-dollar pair, right? The dollar has been on a general downtrend. It is moving in a channel. You can see my supports and different resistance levels and Fibonacci and all that on the chart. All right. So what am I going to learn from, or how am I going to use Ichimoku if I were to just have an analysis right today? Okay, let me just have the other things removed from my chart so that it's easier to see. Actually, we just passed our bearish target. So this has been great, actually, euro-dollar for our trades, because we were bearish on euro, and 124 and 122 are our bearish targets. We just reached our bearish target, which has been great. So if you were not even, let's say, in a bearish trade up until here, you see the market over here tried to break above the Ichimoku cloud or it tried its lower bound a little bit. It teased a little bit, you see, but it was not able to break or go inside the cloud. So this was an indication that the market is going to go back down. And the best thing that the Ichimoku has been telling us in the past few months from May, as you can see, all the 5 lines. Here we have the Ichimoku cloud. The color is a little bit different right now, but so we have the Ichimoku cloud. It is red. I've set it up to be when the market trend is down, my Ichimoku cloud is red. So it has been in the red zone for ever since the downtrend started. And the Senko, both Senko spans have been moving down, right? The Chiko Span over here, you see this is the Chiko Span, this is the delayed line. It has been moving down. The Kijun Line, we have it in also the Chiko Span was green. The Kijun Line is blue in this chart. I'm sorry for changing the colors, but you can obviously, as I said before, you can have different colors. Let me just make it a little bit brighter. Oh, by the way, you can change the colors of your indicator by clicking on them, and as you can see, you can use different colors for different areas. So you have the Tenkan Line color, you have the Kijun Line color, Chiko Span, and all that. So we can definitely go ahead and set the colors that are going to be easier for you to identify the different lines. So as you can see, this is exactly what Ichimoku can predict. All the 5 lines, both Senko lines, Kijun Line, Tenkan Line, and the Chiko Line are moving down. Therefore, that is basically an indication that the euro-dollar market is in a downtrend. We did just break below a key support level, so that would mean that we can even see more further down moves coming up towards the next key resistance level, which is in fact the lows of back in 2012. Yes, that is the low of 2012, the 121 level. So because not only we have the support level set up from way back, the Ichimoku cloud is also telling us the markets may in fact move further down. And while we're at it, I just want to show you what I meant by the Forex market cycles. Didn't I tell you that the Forex market usually and normally moves in cycles? As you can see, well, it's not always the exact same areas that it goes back and up, but you can see you have the bell shape. It goes, you make a mountain. Let me just use this over here. So this is how fascinating the Forex world is. It goes up, it goes down, it goes up, it goes down, it goes up, it goes down. So this time around, we were not able to make it as high as over here as the highs of 2011, but it still went up and is now going down. So now the question is, since our high of the recent high was much lower than the previous cycle's high, should we expect a lower low than the previous low? So that is for us to answer, because in the past 4 or 5 years, the lowest low has been in the 119 area, as you can see here. So this is the 119 area. So since the highest high has been much lower than the highest high in the previous times, there could be a possibility that this time around, euro is actually going to be in big trouble, and we could see the markets going even further down than the previous support levels. All right, so this was the euro-dollar daily chart. We do have 5 minutes, so I do want to show you the euro-dollar 4-hour chart with the Ichimoku as well, so that you can see the differences between the two. So this is the 4-hour chart. The 4-hour chart is moving faster, right? The Ichimoku is basically going up and down because in the micro level, the market is going up and down pretty fast. It is more volatile. That is why a 4-hour chart is better for the a short-term trader, right? So as you can see, the markets over, let's see how the Ichimoku actually plotted us before. So for example, over here, right, the prices entered the Ichimoku cloud. Not only that, we had 2 spinning tops. What did that mean? The spinning top, from people who attended the previous webinar, of consolidation candlestick pattern. And then it was followed a very strong bullish candle. Not only that, but it broke above Ichimoku cloud as well. So that was, in fact, a bullish indicator. What happened? Can you see that the market went up to here? So the market, the prices broke above the Ichimoku cloud over here, and if a trader was basically following the Ichimoku's indication over here, after the confirmation of the broke above the Ichimoku cloud, you would have entered a bullish entry over here, a bullish position over here. The market tried, you see, it tested breaking below the Ichimoku cloud, but it wasn't able to, so it went all the way up to here. So how you would have known that the market, this is going to be your profit target, only based on Ichimoku, and I'm not basing on my analysis on anything else, which is normally not the right thing to do. But look at this. What is this? This level that you could have basically taken profit. It is, in fact, you see, this level, the higher level of the upper band of the Ichimoku cloud over here. I told you can use it as a resistance level for your target market. There, you have it. You could have used this level, but it is not the exact price. That is the problem with it. But this is basically an average of the high of the most recent Ichimoku cloud that you could have used as a profit target setting. Obviously, that is not the only way you can do it. There are so many different ways of choosing a profit target that I am not going to get into. We have 3 minutes. I did want to quickly, okay, let me see if we have any questions. Sarah, did I answer your question? Yes, thank you. And so I did want to take a look at the Ichimoku cloud on the weekly chart as well, on the dollar-yen pair. As you can see, the dollar-yen pair has been, this is a weekly chart, so this is a way longer term period for the very long-term trader. But as you can see, the market has been on an overall uptrend. All 5 moving averages of the Ichimoku cloud are moving up, right? So even though we've been having a test of the market below over here, we've been having a bit of a pullback. We could expect the market, because of all the indications that we're getting from the Ichimoku cloud in the longer term period, we could expect the market to go back up and reach our profit target at 124. So as I said, I'm just going to wrap it up by saying that Ichimoku is solely and mainly an indicator just to back up your trading analysis based on other technical techniques that we've spoken about before. But it could be a powerful tool just to back up your general idea of the market movements. I am going to open up for questions. We have 1 minute. If you have a question, shoot it out right now. If you are going to think about it and you come up with a question later on, definitely shoot us an email either to info@orbex.com or info@investdiva.com, and we will make sure to get back to you with a good answer to your question. All right, so thank you, Mohammed, for the kind words, and yeah, I can see what you're typing. Thank you so much. Thank you so much, everybody, for attending. I hope you enjoyed the webinar and it was useful. Happy holidays. I may not see you until the end of the year. If you celebrate the Western style New Year, Happy New Year, and we will see you next time.